Hello again, and welcome to Open Brand's OPE webinar. Thank you for joining us today as we focus on OPE trends shaping the market for 2025. My name is Stacey Hughes, and I will be the moderator for this session. Before I introduce our host, I'd like to cover a few housekeeping items. Today's session will be recorded, so the audience is muted. We will share that recording within the next 1 to 2 business days, so please be on the lookout for that. We have saved Q&A for the end, but please post questions as they come to mind in either the chat or the Q&A tabs to the right. I will be monitoring both of those. If we run out of time for your question, we will follow up directly with you via email. Just a quick overview of who we are and what we do here at Open Brand. Open Brand was founded in 2023, but has been a leading provider of retail intelligence for consumer durable goods for more than 20 years. In 2023, we combined 4 powerhouse companies, including Gap Intelligence and Trackline, to give our clients key insights into not only what happened in the market, but why it happened. Open Brand brings it all together, market measurement and competitive intelligence, so our clients can move faster and make smarter calls. For the purpose of today's webinar, your host, Adrian, will be focusing on market share, mind share, CPI, and pricing and promotions data to give you a look at what is shaping the overall OPE market thus far in 2025. Now I'd like to introduce Adrian Spear, our OPE category expert. Adrian, would you like to share more about yourself and what you do here at Open Brand?
Thank you, Stacey. Hi, everyone. Thanks so much for joining us today. For those of you who don't know me yet, I'm Adrian Spear, Senior Analyst here at Open Brand. I've been with the company for almost 10 years now. I joined Gap Intelligence in early 2016 and was previously focused on the print industry. I moved into the role of OPE Analyst early this year, and I'm excited to dive in and share some insights from Open Brand's full suite of market measurement and market intelligence products. We're covering a lot today, so as Stacey mentioned, please feel free to ask questions along the way in the chat. We're going to start with the cordless market evolution, taking a look at ongoing shifts in fuel type preferences, which brands and retailers are leading the electrification of OPE, and then we'll just discuss pricing dynamics, tariffs, and promotional strategy amid the current economic environment. We'll follow with a deeper dive into retailer strategy and the evolving competitive landscape. We'll also touch on sustainability trends, the ongoing push for reduced emissions and noise compliance, and the next-gen trends that we expect to see in the market in the future. Finally, we'll wrap up with key takeaways and some time for Q&A. Before we get started, I wanted to quickly highlight some nuances about our retailer panel and data sources as they pertain to the various products within Open Brand's offerings. Our insights are built on comprehensive coverage from multiple data sources and inputs. On the consumer side, we're fielding survey questions that account for purchases across 100% of the market. Within our market share service, we model unit and dollar share down to the SKU level and currently cover about 70% of the market, with major players that include Amazon, Home Depot, Lowe's, Walmart, and Best Buy. And we're very excited to announce that Ace Hardware and Tractor Supply are joining the OPE market share panel in Q4, and Harbor Freight and Menards will follow shortly after. All right, let's get right into it. So here we're starting with high-level mindshare survey trends, showing consumer reported dollar share by channel in the OPE market. We can see that the 5 retailers that make up Open Brand's current market share panel, and again, those are Home Depot, Lowe's, Amazon, Walmart, and Best Buy, continue to account for roughly 70% of the market. Independent power dealers make up roughly 8%, while everyone else, which includes Ace Hardware, Tractor Supply, Menards, Harbor Freight, is about 20%. Let's go ahead and zoom in on our first key topic for today, the cordless market evolution. Across the 5 retailers in the current market share panel, Ryobi continues to lead in overall OPE unit share, with Craftsman, Ego, and Greenworks rounding out the top 4. Ryobi is slightly down from last year, with Craftsman's share showing the most significant decline among top brands. Meanwhile, Ego, Greenworks, and Hypertef continue to gain ground. These trends highlight how both retail exclusive brands and competition in cordless ecosystems are reshaping the brand rankings. Across the market share panel, cordless now makes up the majority of OPE units with just over 60% share, surpassing both gas and corded products combined. The fastest adoption has been in handhelds like trimmers and blowers, while gas still holds on to the vast majority for riders and zero turns for obvious related reasons to power. Walk-behind mowers remain evenly split between gas and cordless after seeing battery-powered growth decline in recent years. Corded share has declined more gradually and remains the dominant power source for pressure washers. Cordless handhelds have grown significantly in the past few years, outpacing other types of OPE and taking share directly from gas. Leaf blowers and line trimmers grew the fastest, up nearly 20 points and 18 points respectively since 2022. These trends really demonstrate strong customer adoption and preference for cordless handhelds as technology and convenience continue to improve user experience. Gas handhelds have continued to lose ground as this transition accelerated in recent years. At the retailer level, Home Depot dominates cordless OPE unit share. At Home Depot, cordless makes up nearly 2/3 of OPE units sold year to date, compared to about 1/4 for gas. This split really underscores how central cordless is to Home Depot's assortment strategy, especially in walk-behind mowers, trimmers, and blowers. Lowe's takes about 28% of relative unit share in cordless, while Amazon sits at roughly 18% and Walmart follows with 13%. Average price paid for cordless OPE has increased since 2022, up about 8% across categories. Pressure washers show the most significant increase in APP, up 23% in 3 years. These trends show that consumers are willing to spend more on cordless equipment when performance improvements are clear. Gas OPE, on the other hand, shows mixed trends. Overall, APP increases were modest for gas equipment, with the exception of pressure washers, which have seen incremental increases in recent years. APP for walk-behind mowers actually declined slightly, signaling that buyers may be trading down in gas or switching into cordless. This shift suggests that gas is moving into premium niche when pro-level power is needed rather than the mainstream consumer default.
Adrian, I'm just curious, do gas pressure washers make up a large percentage of unit share for this category?
That's a great question, Stacy. Gas-powered pressure washers make up about 1/4 of unit sales by fuel type across the market share panel, so still a significant amount, but far behind corded, which is around 62%.
Okay, thank you.
When consumers choose cordless, they're prioritizing convenience, durability, and smart tech. Push-button start, low vibration, and quiet operation all matter to customers, as well as tougher housings that won't break, and brushless motors for improved performance and durability. Compatibility across a single battery platform continues to be a major factor, and we see manufacturers and brands working to communicate the benefits and unique value proposition of their battery ecosystems. This is where battery ecosystems really drive loyalty. Once a consumer invests in one system, whether that's Ryobi, Ego, or Milwaukee, they're typically locked in and much more likely to keep buying within that brand. Battery ecosystems are the new loyalty drivers, and each brand is working hard to highlight their standout features in performance, convenience, and compatibility. Once consumers invest in a platform, switching is rare. Now let's turn to pricing, tariffs, and promotions, 3 of the forces that are reshaping consumer behavior, as well as how brands and retailers compete. Tariffs are weighing heavily on OPE manufacturers and brands and are already reshaping strategies. Earlier this year, Stanley Black & Decker announced restructuring and increases to end-user prices to manage higher input costs. Husqvarna also warned of more price increases, and Steel was direct in saying tariffs are taxes that consumers will ultimately pay. The message is consistent. Manufacturers are unable to absorb all of these additional costs. For retailers, that means that higher pricing pressure is already a reality in 2025. Across the retail channel, we're already starting to see that impact. Open Brand's reseller price tracking shows how brands are moving at different speeds. In handhelds, Troy-Bilt has raised average price the most aggressively by over 12%. DeWalt and Black & Decker have also lifted handheld pricing by 10 and 9%, respectively. In pressure washers, Ego led with an average increase of over 12%, while Black & Decker pricing is up nearly 10%. Some brands are willing to risk volume to protect margins, while others are using smaller moves to defend share. Open Brand CPI data shows that price growth re-accelerated in August. Home improvement goods are now outpacing other durables and personal goods, with month-over-month price growth of 0.68%, compared to an overall increase of 0.43% across categories. This price growth is being driven by reciprocal tariffs, expanded duties on metals, and the elimination of import exemptions. In short, costs are rising and consumers are feeling it. Open Brand now has the capability to show category-level CPI data for OPE and other products, so please connect with us if you're interested in zooming in on the market. Open Brand data shows that reseller pricing is up across nearly every category. Pressure washers, leaf blowers, chainsaws, and line trimmers have seen the most significant average price increases over the last 6 months. The exceptions are riding and zero-turn mowers, where average reseller pricing actually declined slightly, evidence of consumer price sensitivity on these biggest ticket items. Open Brand's Mindshare Durables Consumer Survey reveals just how OPE shoppers are feeling about tariffs and how they're influencing purchasing decisions. In Q2, nearly 38% of OPE purchasers said that tariffs influenced their purchasing decision in some way, whether by delaying their purchase, buying earlier, or buying more American-made products. That figure increased from 31.4% in Q1. We also saw a 4-point decline in the number of purchasers who said that tariffs did not affect their decision, and a 3-point drop in purchasers who said they didn't know about the tariffs. Open Brand survey data reveals some interesting splits in tariff influence by age range as well. OPE purchasers under the age of 25 were most likely to consider buying more American-made products, while purchasers age 65 and up were least likely to be influenced by tariffs. It's worth noting as well that shoppers age 35 and over accounted for 2/3 of OPE purchases in Q2, with the 35 to 44 age range representing the largest demographic. The impact of tariffs on OPE promotional activity tells an interesting story. We're seeing a notable shift towards promos on lower-priced, lower-margin products. This shows up in promo trends data in the form of higher average discount percentage, but lower average dollar value. This tells us that retailers are protecting margins in high-value categories while still using entry-level SKUs to drive traffic and clear inventory late in the season. For some brands, this environment raises the risk of being pulled into traffic-driving deals that compress ASPs, while premium ecosystems will stay more shielded. We're also seeing an increase in value-add offers that bundle together tools and batteries, and even higher ticket equipment being bundled with lower-priced tools as a means to preserve price point while driving broader battery ecosystem adoption. At the brand level, Greenworks has consistently been the most promoted brand year to date, accounting for nearly 17% of all instant saving offers that we've captured. By volume, Works and Ego followed. In terms of discount value, Cenex was the most aggressive, with average instant savings of over 30%. At the retailer level, Amazon led in instant savings volume, with over 29% of offers captured year to date. Walmart, however, was most aggressive, with average instant savings of over 28% on OPE products. All right, that was a lot of information. Let me pause here for a moment to see if Stacy's gotten any more questions.
Great idea, Adrienne. I actually did get a few, and I've been sifting through them. The one I have for you right now is about promotions. So which products do you see the most aggressive discounts on?
That's a good question. So this season, we've seen the biggest discounts on leaf blowers, which have had average instant savings of nearly 23% on promotion. And this is a good example of the increase that we're seeing in promo savings on the lower ticket items.
Great, thank you.
Thanks, Stacy. All right, now let's shift into the retail channel landscape, where the battle for share is playing out differently across big box, mass merchants, and specialty players. Open Brand's Mindshare survey shows that the OPE buyer base is shifting younger. Millennials and Gen Z are steadily increasing their share of purchases, while boomers and maturers are declining. This shift matters because younger buyers tend to prioritize cordless products, sustainability, and online shopping convenience. It really signals a generational inflection point that will influence how brands market and where retailers invest. Turning our attention back to market share once again, Home Depot continues to lead in OPE unit share, but Lowe's wins in dollar share. Both retailers' unit share is down slightly compared to 2022, while Walmart and Amazon are making incremental gains. The story here is that competition is no longer just a Home Depot versus Lowe's battle. Mass merchants and online platforms are capturing meaningful share, which is reshaping how brands must allocate their resources. At Home Depot, Ryobi is the clear anchor brand, accounting for more than 56% of OPE unit share. Cordless dominates, making up 64% of sales, and line trimmers are the highest volume categories. Walk-behind mowers, however, generate the most dollar share at 19%. Home Depot's strategy is clear. Leverage Ryobi's ecosystem to lock in consumers, then drive additional revenue through higher ticket categories. Craftsman remains on top at Lowe's, but Ego and others are gaining quickly. Cordless is the majority fuel type at 57%, and ZTR mowers drive the largest share of dollars at 27%. Lowe's is walking a fine line, balancing Craftsman's broad recognition with Ego's premium cordless appeal. The shift in share that we're seeing shows that Ego is becoming the real growth engine, demonstrating the power of premium cordless OPE in big box. Ryobi unsurprisingly dominates cordless OPE at Home Depot, but in gas, Echo leads the pack. Interestingly, Ryobi still holds the number 2 position in gas, showing the brand's breadth across fuel types. We are seeing Ryobi's gas lineup gradually lose unit share, however, and Home Depot's focus is squarely on growth through the brand's strength in cordless. The takeaway? Home Depot will lean on brands like Echo for pro-grade gas performance, while continuing to push Ryobi as its core DIY offering. Ego's cordless share at Lowe's has jumped to over 39%, up 5.5 points year over year. While Craftsman lost share in both gas and cordless, it still remains the leader in gas. Toro has made impressive gains since entering Lowe's in 2024, holding about 24% of gas OPE unit share. These trends show that Lowe's is leaning into Ego to drive cordless momentum, while using brands like Craftsman and Toro to diversify its assortment. Customers spend more per product at Home Depot across nearly every OPE category except riding mowers. This reflects Home Depot's cordless heavy mix, where premium batteries lift APP. Lowe's leads in riders, where ticket sizes are naturally larger. This shows how each retailer is leaning into differentiation rather than only competing directly on the same categories. These differing strategies are even more apparent when we compare assortments between the two big box leaders. Open Brand's retailer price tracking data shows that assortments at Home Depot and Lowe's are similar in size overall, but composition differs. Lowe's offers 43% more riders and ZTRs, aligning with its revenue focus on higher ticket items that appeal more to its rural customer base. Home Depot, meanwhile, emphasizes cordless with a healthy mix of DIY and pro-level bands and products. These strategies highlight how assortment choices reflect differing shopper demographics. Walmart shoppers spend on average nearly 18% less than Amazon shoppers on OPE products. Walmart keeps prices down to drive traffic, while Amazon captures higher value purchases. For brands, this means that Walmart is the volume player on entry level, while Amazon is better positioned to capture margin on premium cordless. Amazon and Walmart employ similar assortment strategies with broad brand variety and cordless first positioning. Greenworks, Ego, Works, and Black & Decker are prominent at both, showing how mass merchants curate ecosystems to meet demand. The key differences are in customer base, and that translates to execution. Amazon leverages breadth and convenience, while Walmart doubles down on affordability. Amazon's average OPE assortment is priced about 12% higher than Walmart's. The gap is widest in snow throwers, chainsaws, and pressure washers, where Amazon leans more premium. While Walmart's strategy is low prices above all else, Amazon positions itself around choice, everything from A to Z, and convenience. This means Amazon is playing both ends of the market, while Walmart's core focus is on value. Walmart's private label push is reshaping its OPE business. Hypertough leads and saw an impressive 7% unit share growth year over year, but brands like Greenworks and Scenics also round out the mix. More than half of Walmart's OPE sales are cordless, and nearly half of SKUs sold year to date were under $100. Line trimmers dominate unit sales, while walk-behind mowers generate the most revenue. Walmart's strategy of affordability plus control through private label dominance is clear. An Open Brands Mindshare survey shows us that customers got the memo. In Q2, 67% of HyperTough OPE purchasers said the number one reason for buying the brand was competitive price. Amazon's OPE presence is growing fastest in handhelds. Cordless accounts for 65% of sales. Line trimmers are both the top unit mover and the leading revenue generator. Most units sold are $100 or less, but Amazon's mix also captures premium buyers with brands like Ego and DeWalt. This dual positioning helps Amazon expand reach across the value spectrum. Focusing in on retailer assortment and pricing trends in the specialty retailers, Ace Hardware leans into premium while Steel and Ego are anchoring its assortment. Tractor Supply emphasizes breadth, with Works and Greenworks leading cordless share along brands like, cordless assortment along brands like Husqvarna and Toro. The strategies also reflect different customer bases. Ace serves higher income suburban homeowners, while Tractor Supply aligns with rural and farm-focused buyers. Ace's assortment is priced on average 16% higher than Tractor Supply's, driven by chainsaws averaging over $1,000, in large part due to its large lineup of Steel's premium assortment. Tractor Supply, meanwhile, carries a smaller but more premium rider assortment than Ace, targeting rural lifestyle customers. The key takeaway here is that Ace emphasizes premium assortment breadth that targets neighborhood DIYers, while Tractor Supply wins in big-ticket category expertise with a side of life out here consumables. All right, let's take a moment to pause and shift into sustainability, compliance, and next-gen trends, factors that will shape the long-term trajectory of the OPE market. California currently remains the only state with a statewide SOAR emissions ban, but regulations on noise and engine type exist at the county and municipal level across multiple regions in the US. The long-term direction is clear. More restrictions will follow. Manufacturers are adapting with expanded battery lines, modular designs, and sustainability investments. Regulations and consumer preferences are already aligned, which is accelerating cordless adoption and reshaping product roadmaps. The next wave of OPE innovation will focus on these core areas. We expect to see higher capacity batteries and faster charging that continue to close the performance gap with gas. Robotics and AI innovation, especially in mowing, as well as integrated smart features like Bluetooth and app compatibility, will develop at an accelerated pace. And lastly, sustainability will become a differentiator where recyclability and eco-marketing will help to shape brand narratives. The winners will be the brands that deliver on performance, innovation, and sustainability in the long term. All right, well, that was a lot to digest. So before we wrap up, let me just walk through some of the summary and key takeaway from this presentation. Four main themes definitely stand out here. Cordless is now the dominant fuel type led by handhelds, with consumers paying more for premium features that improve performance and user experience. Tariffs and inflation are pushing prices higher, while promotions shift toward lower margin products and bundles. Retail competition is widening beyond the big box status quo. Home Depot and Lowe's still lead, but Walmart and Amazon are growing. And finally, sustainability and innovation will shape the next decade of OPE as regulations tighten and robotics and AI enter the mainstream.
Thanks, Adrienne. That was a lot to cover today. So thank you. You did such a great job. Before we close out and start some of the Q&As, just want to send out a little reminder that you could go ahead and post those questions. We have a few that have come in, but if you wanted to ask Adrienne a question, please post that now. And before we go to that, I just want to say thank you to our audience members for your time here today. Before we move into this next little Q&A section, I'd like to share an offer that we're putting out there for those that joined us. This offers an easy way to get access to data you need to benchmark your top 3 KPIs. Just scan the QR code and tell us up to 3 KPIs you care about most, and we'll send you a free OPE personalized data snapshot, benchmarking you against the market average and your top competitors. So go ahead and scan that QR code if you're interested in getting some additional data on OPE from Adrian. And we'll go ahead and get started with a couple of questions. Let's see. Question number 1. Do you think Tractor Supply will lag behind in cordless adoption because their customer base is more rural?
That's a really interesting question. I think possibly in the short term, yeah. Rural buyers are often more comfortable with gas, and especially for bigger jobs, that might be their go-to. But as cordless riders and higher voltage tools improve, I think adoption is going to pick up there too. It's just probably going to take a little bit longer and happen a few years later than in suburban markets.
I'm curious, Adrian, I really want a robotic lawnmower. And I'm wondering, do you know off the top of your head who's buying that? I mean, I feel like that's such a great play for the female consumer, right? Like, I hate doing lawn work, and just curious, do you have any?
It's such an interesting part of the market. And in terms of who we're seeing sell them, we're seeing a lot of the vacuum manufacturers getting into the business because they already have a solid understanding of that technology, just on the inside instead of the outside. So they're incorporating the technology of, mapping the area and being able to visualize any obstructions. They're taking that technology and combining it with mower technology. So I find it really interesting. I think right now what we're seeing is it's still a pretty small part of the market. Those early adopters, people who are kind of excited about new technology, have been the ones to buy those products now, at least in the US. Much broader adoption in Europe, interestingly. But on average, people have smaller yards, and they're usually much more even in dimension, I suppose, that has made it easier for some of those early models to be able to map out a yard without having the better technology with GPS and stuff. Maybe they're still using wire-based models for their perimeters. So, but if you buy one, let me know.
Yeah, it seems like a great bundled offer, honestly. The vacuum and the yard. Sorry, I digress. Another question that just came in. With supply chain pressures, do you expect Walmart and Amazon to keep such wide assortments?
It's a good question. They may trim around the edges some, but both of those retailers really rely on assortment breadth to win customers. Amazon especially is going to continue to lean into marketplace sellers to expand options without having to carry all that inventory risk themselves.
It really is interesting to see how Amazon has kind of moved into that space, right? Like, they're making themselves known in there. It's been interesting to watch them grow that market share.
Yeah, and it's really interesting to just see how other retailers are kind of following suit with Amazon's business model. So we just saw Best Buy recently relaunch its marketplace offering. I think they offered marketplace like over 10 years ago or something. It didn't work out for them then, but now they're going back to that model to see if they can help increase their sales through second and third party.
Awesome. And let's see, I have another question here. How do you see Ryobi's broad ecosystem stacking up against Ego's more premium one?
That's a good question. Ryobi definitely wins in terms of breadth and affordability. It's definitely a household name. It's very ubiquitous at the Home Depot, and it reaches a lot of customers across categories. Ego, on the other hand, is definitely focused in on performance and premium positioning. And I really see them appealing to different customer bases. Ryobi's pushing more for DIYers and value-focused buyers. Ego is definitely going after consumers who want gas-like performance, but without gas. And they appreciate those premium features and are willing to pay extra for them. So both approaches are definitely working. They're just targeting different parts of the market.
Awesome. Okay, well, that's all we have in terms of questions for today. So thank you to everybody that joined us. As I mentioned at the beginning of the webinar, we'll send the recording and the slides out to you in the next couple business days. Please take advantage of the QR code, scanning the QR code for a a little rundown of your KPIs and some benchmarking around OPE data of your choice. So we are grateful for you here today. And thank you again, Adrian, for all of your great insights.
Thanks so much, Stacy, and thanks to everyone who joined us today.
Thank you.